Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into a report from MFS Institutional Money Market Portfolio. I know, sounds about as exciting as watching paint dry, but trust me, there are some interesting things hidden inside. We'll try to make it fun or at least not put you to sleep. So what is this all about? This is a snapshot of how MFS Institutional Money Market Portfolio was doing for the period of September 1, 2024 to February 28, 2025. Think of it as a checkup to see if the fund is healthy or needs a financial doctor. Let's talk money. If you had invested $10,000 in this fund, the cost would have been just $1. That comes out to only 0.01% annually. That is really low. Basically, you are not paying anything to have your money in the portfolio. Here are some quick stats from February 28, 2025. The fund had over $7 billion in assets. That's a lot of money. They were holding 61 different investments. It is good to have a lot of cash. Now, let's see where their money was. About half of their investments were in US Treasury and US government agency securities. These are seen as very safe investments. Another big chunk, around 26.5%, was in repurchase agreements that are backed by those same safe US Treasury securities. And the remaining 23.33% was in commercial paper. Everything held by the portfolio had very high quality credit ratings. This fund plays it safe. These ratings are like a report card for investments, showing how likely they are to pay you back. Now let's scroll down to see their investments. The fund invests in short-term commercial paper from companies like LVMH, which owns brands like Louis Vuitton. They are buying 70 million of their paper at a rate of 4.63%, a pretty good rate of return. It also holds debt from government agencies like the Federal Farm Credit Bank and the Federal Home Loan Bank. These are pretty normal debt purchases for these types of funds. Now let's see how the fund looked on paper, or rather on the statement of assets and liabilities. This is like a financial snapshot. They had over $5.2 billion in investments, add to that $1.8 billion in repurchase agreements. After subtracting what they owed, the fund's net assets, its total worth was over $7 billion. That is a big balance sheet. Next up, the statement of operations. This is like the fund's income statement, showing how much money came in and how much went out over the 6 months. The fund earned over $152 million in interest. That's the money they made from their investments. After subtracting expenses like fees for managing the fund, they ended up with a net investment income of about $151.9 million. Now, let's look at the statement of changes in net assets. This shows how the fund's total value changed over time. The fund's net assets increased by almost 70 million in 6 months. Most of that increase came from the fund's income and some from new investments. These highlights give you a quick look at how a single share in the fund performed. The total return, which is how much you would have made if you held the investment, was 236% for the 6 months. There's also a note about fees being paid indirectly. Basically, the fees the fund pays to the bank holding its money can be reduced based on how much money the fund has on deposit. It's like getting a discount for being a good customer. Looking at share transactions, lots of shares were bought and sold during the period, but in the end, the fund issued more shares than it bought back. This indicates continued demand and confidence in the fund. The fund has access to a big line of credit, over $1 billion, in case it needs cash quickly. This is like having a credit card for emergencies. There was a shareholder meeting where they elected the board of trustees, the people in charge of making sure everything runs smoothly. All the previous board members were confirmed. Now let's put all this together. This money market portfolio is all about safety and making a little bit of money without taking big risks. The investments are mostly in government-backed securities and high-quality commercial paper. Looking at the numbers, the fund seems to be doing its job well, but with super low costs. The fund's returns are also quite small, as it barely makes a dent in the $7 billion it holds. It also maintains a very safe portfolio composed of US Treasuries and A1 plus or A1 companies. Thanks for watching. If you enjoyed decoding this report with me, give us a like, drop a comment, and definitely subscribe for more financial deep dives.